Hey everyone, looks like we still have a number of people joining. Welcome to the Accounting and Sales Tax webinar with Avalara and A2X. Going to give it just one more minute to let some folks join, make sure everyone can hear. Everyone is on mute, so if you are having trouble hearing or if you don't see the screen with the Accounting and Sales Tax for Amazon Sellers PowerPoint up, please let me know. You can just chat a quick note. And we'll start in just a minute. All right, we'll go ahead and get started. So once again, welcome everyone. Thanks so much for joining today. My name is Martina. I'm with Avalara. And I'm going to just kick everything off with a little housekeeping before we jump into the presentation. So like I said, you have joined the Accounting and Sales Tax for Amazon Sellers webinar with A2X and Avalara. And we have a lot of information to go through today. So we are going to be holding questions until the very end of the webinar. We'll have 15 minutes at the end of the webinar to go over questions. As your questions come up during the presentation, please use the Q&A box that should be visible to you on your screen to enter those questions in. And any questions we don't get to at the very end, we will make sure to follow up with you directly afterwards. So I imagine there will be quite a bunch of stuff to go over, and hopefully a lot of your questions will be similar, so we'll hit everyone as best as possible. So that being said, we will go ahead and get started. So give me just 1 second here. Okay, ready to go. So again, welcome to the Accounting and Sales Tax for Amazon Sellers webinar. Today you're going to be hearing from 2 speakers, Karen Brady and Matt Hammond. Karen is with A2X. She is a trainer and customer success expert. She also runs her own bookkeeping and business consultant practice in the US, and she brings over 10 years accounting experience to her e-commerce focus. And Matt is with Avalara. He is the SMB Business Development Manager, specializing in small business marketing. Matt has worked with Avalara since 2014. His background gives him a unique understanding of the needs of the small business owner. Matt lives in Raleigh, North Carolina, and enjoys spending his free time on the golf course. So, a little fun fact for you. So, we're going to go ahead and get started with Karen. Karen, if you want to jump on in, we are ready for you.
Sure. Hello, welcome everyone. How I got into using A2X was through my first Amazon seller client who already had A2X set up and running. The first time I used it, it was a game changer. It took just a few minutes, no spreadsheet wrestling, no matter how many sales. Years before this, I made the leap to cloud accounting when moving my first e-commerce seller from desktop. At the time, large volume sales for e-commerce could be entered through spreadsheets, which I found time-consuming and prone to errors. Now, every day, I have that satisfaction of showing accounting professionals and sellers all over the world how to benefit from this great number crunching app. A2X has a lot of great features. It is always innovating. Our latest launch is a powerful tool that processes transactions from Shopify, saving time and money. Now, as I share a few tips on A2X today, please let us know if you have any questions. Now, why are businesses automating accounting? Did any of you experience this when you first started out? All the time you took to source and buy product, stuff like shipping to Amazon, listings, tracking inventory, like what happened to that stock transfer? And of course, sales tax. It gets to be too much to keep track of manually really quickly. And it's unrealistic to try and be equally skilled and knowledgeable in all aspects of managing the business. Even if you delegate tasks to others, so many operations just don't have to be done manually anymore. Automating tasks using apps is an important adoption for e-commerce sellers today. Your business is going to grow. It may be exponential. Stay organized, be on top of your numbers and your compliance without such a huge effort. With key apps, you can both keep up with compliance and focus on key drivers for your success, like product research and marketing. Now, sales tax is one of those responsibilities we have when selling products online just about anywhere. As states in the US and countries all over the world see the advantage of taxing e-commerce, more rules are being made regarding sales tax, and the complexity becomes very daunting to keep up with. But keep up with it we must. Fortunately, Avalara is one sales tax powerhouse, offering products to help with all aspects of sales tax tracking, returns, and filing for small, medium, and large sellers. This is automation at your fingertips. So let your business grow without all that worry. Okay, now I'm going to share some tips on using A2X and Avalara together. All right, so this is tip number 1. A2X relies on Amazon settlements for generating accounting entries. The settlement is a time period of transactions that occurred on the Amazon platform in relation to selling your products. Then the net sum of those transactions is what Amazon deposits into your bank account. A2X is best known for translating Amazon settlement data into summarized transactions that can be mapped and sent into your accounting system, where they can be reconciled to Amazon deposits. This completes 2 tasks at once. 1, recording a summary of all your sales, your fees, loans, held back funds, and of course, sales tax liabilities. And 2, reconciling to your Amazon deposits. And this is all just in a few clicks. So talk about automation. This is a big help for e-commerce sellers. Now, A2X does not specialize in sales tax by state tracking in the US, and there's a very good reason for this. There is very specific information required to determine the rates for each sale, and it is just not available in those settlement files from Amazon. However, in summary accounting, this is okay. It's best to use an app like Avalara that directly connects to that part of Amazon where all the sales tax details are. Avalara can track your sales tax details for you instead. As you pay your sales tax returns from business accounts, you can pay down your liability when you allocate those payments to your sales tax liability account. Let Avalara handle the complexity outside of your accounting system, and let A2X help you keep it simple inside your accounting system. Tip number 2, This is about Marketplace Facilitator Tax. Some of you may have already seen this coming up for you. Marketplace Facilitator is a marketplace that third-party sellers, such as Amazon sellers, use to promote and sell products. In this example, Amazon is the marketplace facilitator. There are others up and coming, such as EC, who are required to handle sales tax for certain states now. Other e-commerce platforms should let you know when these new rules will start to apply to you. Back to Amazon, certain states now require Amazon to be a facilitator that charges and collects the sales tax on your sales to customers in those states. As a seller with sales in such states, so if this marketplace facilitator tax is moving responsibility to collect and pay away from you, the Amazon seller or e-commerce seller, as that starts to happen, you may ask, well, do I still submit sales tax returns for marketplace facilitator tax states anymore? The consensus is it depends. As a seller with sales in such states, seek advice from Avalara and a sales tax expert, especially if you have large volume sales outside of Amazon to states with these kinds of laws. So the Amazon accounting for marketplace facilitator taxes plays out in A2X as a part of a normal sum of sales tax charges during a settlement period, and then gets deducted from your settlement as a separate transaction. So Amazon can pay those states that have this relationship with Amazon. And these transactions mapped to your sales tax liability account will wash out as Amazon does its thing. So in this example, sales tax is charged the $4.16 on a $40 sale. If the order is going to a state with marketplace facilitator tax laws, Amazon's going to hold back that $4.16 from your settlement. Then it takes that money and it pays that sales tax to the state with the marketplace facilitator tax laws. So to sum up, customers drive where you need to register, as well as where you have physical Nexus. It's important to get this information before your sales go into SuperDrive. However, even if your sales are already going into SuperDrive, it is never too late to get it together. So better late than never, they say. So thank you. Matt, would you like to jump in here and talk about how the latest sales tax changes impact e-commerce?
Sounds good, and thank you, Karen. Very great partnership we have with A2X, and I've spoken with a lot of folks that have used you guys in the past, and I always hear great things. So really appreciate everyone taking the time out of their day today. And I want to do, we're going to go through quite a few slides. Any other questions that come up, please type them in. I see quite a few that are coming in right now, but we'll leave plenty, at least 15, 20 minutes towards the end. So I want to dive into this and really also, make sure we're connecting with the Amazon seller, because there's a lot of things that are going to be related to sales tax for selling on Amazon specifically, and I also directly want to correlate this to just selling in general. So as Karen was talking about the marketplace facilitator states, so there were 14 initially, and that number seems to be growing every day. One of the things we're going to send out to everybody after the call, and I'll try and put it in the chat when we get close to the end of our presentation today, is we have a great link in our help center that will walk through what your responsibilities are and or requirements in the marketplace facilitator state. So there are a handful of the states on the screen where if you're only selling on a marketplace and they are facilitating and remitting the tax on your behalf, then you may not have to get registered. There are quite a few of them that you still have to get registered, and that may either lead to a $0 tax return or just remitting the tax that you're selling on any of your other channels. So as you can see in the top right, as a marketplace facilitator, Amazon's going to be responsible to calculate, collect, and remit the sales tax by the third-party sellers in these particular states. So there's going to be a lot of the work that's going to be done by Amazon on your behalf in some of these states, and then in a few other states it's going to be still liable for you if you're enrolled in the FBA program and you are selling on Amazon. So this is very new. A lot of this is slowly picked up over the course of the last 12 to 14 months, and a lot more states have started to follow suit. You can see the timeline and the effective dates for the individual states here. And I'll give a bunch of examples as we go through the rest of the webinar today on why you may have to get registered in states aside from your actual Amazon sales. All right, so I want to do a high-level sales tax overview. So we're going to talk now for a few minutes about, what does sales tax mean, right? Sales tax 101, where is it coming into play? And before we get going, I just want to make sure, I think we're good. I may have jumped audio. Give me 1 second here now, just double checking. So companies are,
you're good.
Okay, perfect. All right, good. So businesses are responsible for collecting or remitting sales tax on behalf of their sellers. And assuming you're selling something that's taxable, and for the most part, businesses that are selling on marketplaces or like Amazon, eBay, Etsy, Walmart, Jet, you're typically going to be selling a tangible good, so something that's TPP as we refer to it. Tangible personal property is always going to be taxable unless you're selling to someone that is a non-taxable customer or you don't have a responsibility to collect tax in that state. And I love when I talk to folks and they're like, oh, well, sales tax isn't really challenging. Well, there's 12,000 taxing jurisdictions in the U.S., and I spoke with a gentleman last week who said Texas was really easy. And I had to challenge him because Texas alone has 1,398 taxing jurisdictions. So there's quite a few different taxing jurisdictions in Texas, and he was just doing one rate, so we're working to get him straightened out. But if you think about what goes into a tax calculation and where there are exceptions, right? Is a product or service actually taxable in that state? Are you selling to a customer that's even taxable? Anytime you're selling to a customer that is not taxable, you want to make sure you're getting an exemption certificate, a PDF, or documentation to provide, heaven forbid you go through a sales tax audit, why you didn't charge them tax. Because I've talked to folks in the past and they've failed sales tax audits because they couldn't prove why a customer was exempt. So the best way I like to phrase it, as we start to round out 2019 and head into 2020, one of the big things you want to make sure is just reach out to whoever your customers are that are exempt from sales tax. Tell them you're updating your books. You just need to get their most recent up-to-date exemption certificate on file, and I promise you they'll send it over, but that's going to be the responsibility of the seller to make sure they get that information. The taxability of products obviously is going to vary from state to state. Every state is different. There's only 45 states plus Washington, D.C. that actually calculate and collect sales tax, and I'll walk through those here in a few minutes. And then if you think of everything that goes into an actual transaction or to calculate sales tax, right? The who, what, when, where, who, what, where, when, why, and how. When you see down here below under where, you'll see taxing authority. You'll hear me say that word quite often. Taxing authority is just a fancy word for a state, and then there are some individual states that have sourcing rules based on if you have a product in that state and you're shipping within the state, you may be charging sales tax based on where the product is shipping from, not necessarily to. 90% of the time, sales tax is derived from wherever the product is being shipped to. So I'm going to take a few minutes. I want to do a deep dive into the economic nexus and what this means and what happened over the course of the last 12 to 13 months. So at a high level, South Dakota went to the Supreme Court and they said, look, guys and gals, the way people buy and sell products has drastically changed from 20 years ago, right? Think about it. You used to always have to go to a store to buy it. You had to drive to a brick and mortar location. You couldn't order something on Amazon and via Prime, it'll be at your door in 2 hours, right? It didn't used to be like that. So the Supreme Court heard them out and they said, okay, we are going to overturn the rule that stated in the past you had to have a physical presence in order to require companies to collect or remit sales tax. So the ruling was overturned and they granted South Dakota the right to now charge sales tax on remote sellers. So when I say remote sellers, you want to think selling on a marketplace, or you're doing fulfillment by merchant. You live in Florida and all of your inventory is in your garage. Well, if you sell $100,000 worth of sales to South Dakota, Or if someone really liked your product and they bought 200 individual orders of them, you would then effectively have to collect, get registered, and remit sales tax in South Dakota. And that's what has changed. So the entire sales tax world got flipped on its head on June 21st of 2018. And I'm going to walk through the timeline for how many states have impacted and what this is going to mean for your business. So a lot of the common questions are, if I'm already registered, does this apply to me? And the answer is no. So if you're already registered in the states where you do business, or Amazon has stock or has your inventory in a state, the ruling makes no difference. You don't have to change. You're already registered. You just keep going about your business, collect, remit sales tax, file a tax return. Number two, does the ruling only apply to online transactions? And it doesn't. So it matters for all sales, because you may have 5% of your sales that are done on Amazon, and then 95% of your sales are done on your own website or over the phone, and you're manually invoicing somebody out of QuickBooks. So it's total number of transactions, whether it's e-commerce or manually in an accounting system like QuickBooks or NetSuite or anything like that. Number three, does the Economic Nexus rule apply to non-taxable transactions? So when we think Economic Nexus, we think $100,000 or 200 transactions in a given state. So the ruling doesn't change the taxability of your products, but it does take into consideration taxable sales and non-taxable. And South Carolina is a great example. They got very aggressive. They said, we don't care if what you're selling is taxable or not. So if you sold software as a service and it was not taxable, and I doubt many people on the Amazon are selling software as a service, but if you're selling something that's non-taxable and you do $100,000 worth of sales into South Carolina, you would then have to get registered to collect or remit sales tax in South Carolina. So they got very aggressive, and we've seen a lot of other states follow suit over the course of the past 13 months. So what it really means is it's going to take into account a lot of different types of businesses. So whether you're a wholesaler, you're a manufacturer, you're reselling a product, all businesses, regardless of how you're selling or who you're selling to, are definitely going to be impacted by this list. So we have physical presence nexus, and then we have economic nexus. And economic nexus is truly based on a level of activity in a given state. And I mentioned that they started this on June 21st of last year. So if we look back over the past 13 months, there's 45 states plus Washington, D.C. total out of the 50 that collect sales tax. 42 of the 46 states have already adopted an economic nexus threshold or law. So they're saying, hey, look, if you'd never go to our state, but you sell a certain amount into our state, we're now going to require you to get registered to collect and remit tax, which is crazy. So there aren't any more businesses out there that are solely going to be required to collect tax in just their home state like they used to do in the past. We're seeing businesses talk to us and reach out to us daily that are now having to collect in 5, 6, 7, up to 40 states just because they sell a certain amount. And if you're a $5 million a year company, if you divide that by 46, odds are you're going to hit that 100,000 threshold in probably a bunch of states. So now's the time to automate. You can see there's roughly 14 states, there's actually quite a few more of late, that have put tax collection obligations for the marketplace, so the marketplace facilitator states. 5 states put use tax reporting in for non-collecting sellers, and then there's only a couple states, that might be 3 now, that have adopted a affiliate or click-through nexus. So if you are advertising your product or running a banner on someone else's website and they have a server in the state, you may have to get registered. So marketing your product is also becoming very important. But again, a lot has changed in the past couple months, and it's been about a year now since, just over a year since they put it in place. So I want to make sure everyone leaves the webinar today and they're very versed in economic nexus. So it's going to apply to every company, whether you're located in Canada, whether you're a foreign seller, but economic nexus is a tax collection obligation imposed on sellers based on their level of sales in a given state. So it's not just physical presence, it has to do with your transactions, so how many transactions do you have to a given state, what is your total revenue amount in that particular state. Some states it's and a handful of states it's or. So if you do 100,000 or 200 transactions, they want you to get registered. So think economic nexus. Now you have to look at all of your sales for all the 45 states that collect tax plus DC. look at the ones that you sell the most to, or where you ship the most products or have the highest number of sales, and you need to then see if those particular states have an economic nexus threshold. That's really the gist of economic nexus and where we're going to go moving forward. So this will kind of give you an idea. There are 5 states that do not do sales tax. So we call those the Nomad States. So that's New Hampshire, Oregon, Montana, Alaska, and Delaware. Ohio just recently turned blue as they've adopted, so we're waiting on Kansas, Missouri, and Florida are the only other couple states that we're still waiting on to actually put a threshold in place. And you can see the question in the top. This does apply to non-U.S. companies, so whether you're located in Canada or you're located in Germany or wherever outside of the U.S., if you're hitting these thresholds, you're selling a certain amount into a state, you are going to be required to collect or remit sales tax. And I'm in no way a CPA or a tax attorney, so I cannot give legal advice. I just get to talk about sales tax 5, usually 6 days a week, so very versed in the space. So economic nexus is a very big deal. A lot of the Amazon sellers that we work with are more so going to hit maybe not the revenue amount in each state, but the transaction volume. And what do you need to think about as you're going through your day-to-day business? I mean, you want to focus on revenue-generating activities, growing your business, driving traffic, improving your ratings, everything as you're selling on Amazon. But there's a lot of things that are really important, and I like to call this your risk profile. So number 1, Nexus. Nexus is an industry term that means you've established some sort of physical presence or a tie to a taxing authority. So where do you need to be collecting or remitting sales tax? Number 2, the calculations and reporting. So Amazon's really smart. You can't turn tax collection on until you have a tax ID in that particular state. Once you determine which states you need to get registered in, you can then get registered and then turn tax collection on inside of Seller Central. Number 3, the product and service taxability. Most people that are on the call that are selling on Amazon are selling something that's fully taxable, unless you get into clothing and apparel or you're selling something that's like digital services or digital download. Those are a couple things that have varying taxability, of which you're just going to have to set that up within your Seller Central account. The jurisdictional rate assignments, that's where you're going to turn that on with inside Seller Central. Amazon's calculating and determining tax. As a seller, it's just going to be your responsibility to file and remit in those states that you are subject to sales tax. I touch on the exemption certificates. Again, it doesn't matter who you're selling to. If they are telling you they're exempt from sales tax, a church, a government entity, a reservation, a school, anything like that, make sure you get an exemption certificate on file. I promise you they have it. The minute you try and charge them tax, they're going to go, hold on, I'm exempt from sales tax, don't charge me. Keep that in mind. Get those certificates. Tell them you're updating your books for 2020, and you want to make sure you have their updated exemption certificate, because if you go through a sales tax audit, the first thing they're going to ask you, and what I've heard they look at the most, are the states that they know you're registered in and the orders that come across or your invoices that have no sales tax. They want to make sure you have your ducks in a row, you have your exemption certificates. Very important. And then number 5, just make sure you're filing your tax returns. You can do all of the first 4 or 5 things correct, but if you don't go file that tax return, that's a big red flag, right? The states are hoping and wanting for this ruling to get businesses registered moving forward. They're not necessarily focused on past liabilities and past exposure. California is a different story. I'll give you an example here in a minute. But the goal of Wayfair South Dakota is to get companies registered moving forward to collect, file, and remit sales tax. All right, so the next part I want to do, this is going to be a little bit more into, maybe outside of, your inventory on Amazon, but what I like to say is, for everybody that's on the call today that owns a business or is a seller, if you have anything on the screen here that relates to your business outside of the state that you are physically located in, these are reasons, and these are the top 10 to 15 reasons why people have to get registered for sales tax purposes outside of the state they're located in. So do you go to trade shows in Texas? Do you have board meetings in Nevada? Do you have 3 offices, one in North Carolina, South Carolina, Virginia? If you do, You're going to have to get registered in those states. Are you crossing state lines to perform services or repair something? If you're a moving company, if you have your own trucks that are crossing state lines, those are reasons why people have to get registered to collect and remit sales tax outside of the state they're located in. So please keep that in mind. These are the top 10 to 15 Nexus building activities as defined from the state's websites. And if you want to go on the Department of Revenue website for an individual state and see, a lot of times they will list all of these things on there and tell you what they do. Because some states, they don't consider drop shipping a Nexus building activity. Some states don't consider contract employees, 1099, a Nexus building activity. Most states do, but just for full transparency, it's something to keep in mind. And the last one you'll see on the very bottom, inventory. Inventory is why we're talking today, because as an Amazon seller and as you're in the FBA program, the Fulfillment by Amazon program, your products are going to be all across the country. And what I mean by that is Amazon has an algorithm that when you are enrolled in the FBA program, they can put your products in any of their warehouses. They know where the majority of them are being bought from and or shipped to, so they want to put them in warehouses where they can get them to them the fastest, to your customers, so you can win the bid. So think about it. There's 30 states where Amazon has warehouses, fulfillment warehouses. 27 of those 30 deem that third-party inventory is a Nexus building activity. So the moment your inventory is in one of these states, and if it's not a marketplace facilitator state, that's technically the moment you had an obligation to collect or remit sales tax. Now again, I can't give you direct advice on what to do, but you want to keep that in mind as you start selling and as you're in the fulfillment program. You want to keep an eye on where your products are being shipped from. And if you're not registered in those states, you should consider getting registered while you also talk with a third party or decide to outsource tax compliance. I live in North Carolina. North Carolina is one of those 3 states that I didn't list because North Carolina is a sorting center, so it's not a fulfillment center. And then again, there's a handful up here like Oregon, let's see here, Oregon, and there's 1 or 2 other ones that are on there that don't have sales tax, but they do have a fulfillment center in those particular states. So again, selling on Amazon and being enrolled in the FBA program can open up your exposure to states that you might have to get registered in for sales tax purposes. So a couple screenshots here with Inside Seller Central. I mentioned Amazon's really smart. They won't allow you to turn tax collection on or collect tax in the county, city, or district level until you have a tax ID. When you do get registered, after you get registered in those states, you will then come in, put your tax ID, tell them you want to charge sales tax at the jurisdiction level, and then again you have gift wrapping and shipping and handling if you want them to take the ownership as far as the taxability. Additionally, when you want to add additional states, you'll just click that box that says Add State. I've mentioned a couple times how, for the most part, you're going to be selling products that are fully taxable, but you want to go in there and look under the tax codes and the tax calculation rules inside of Seller Central to make sure you have it set up properly if you know that whatever you're selling for some reason may have varying taxability. All right, so here's where I kind of do the little Avalara pitch, right? I like to phrase it, we can help you as much or as little as you need. Number 1, figure out what states you have a requirement to collect or remit sales tax. Avalara will do a Nexus study for you for the entire country. It's a flat fee of $4,500. We're going to ask you a bunch of questions based on your prior 12 months of business activities, and then we'll give you a very detailed, customized report specific to your business and tell you which states we believe you need to be registered to collect or remit sales tax. Number 2, register in those particular states that you feel you need to get registered or we've advised you to get registered in. Meaning, every state you're going to have an individual sales tax ID, and then you're going to then put that into Amazon so you can legally collect or remit sales tax. If you're collecting tax and you're not registered in the state, that's a big no-no. That's a big problem. You want to make sure you're not doing that. Number 3, calculate the proper amount of sales tax. So if you're selling outside of Amazon, or if you want to send all of your Amazon transaction detail and rerun it through Avalara, we can calculate tax again. We can alert you if you need to get registered in any additional states. We have direct integrations to over 700 platforms, so anybody that's selling not on Amazon, or if you have some manual sales in QuickBooks or on your personal website using like a Ecommerce, we typically have a direct integration to calculate the tax there. Number 4, track and manage exempt sales. So again, make sure you have exemption certificates on file. Just tell them you're updating your books, get those exemption certificates. We have Avalara Cert Capture, which is a tool that can be used as a standalone or can integrate directly to your accounting software, and it will help to store, maintain, validate, and manage the life cycle of exemption certificates. Fun fact, 2 states actually have rules where the exemption certificates expire every year. So in the state of Washington, where Avalara is headquartered, and in the state of Florida, which I like because they have a lot of golf courses, their exemption certificates expire every year. The moment that certificate expires and you then don't charge that customer tax, you are out of compliance. And that's one of the first things that they're going to look at if you go through a sales tax audit. I can't stress that enough. Exemption certificates are very important. And then number 5, remit sales tax to the taxing authority. Again, quote, quote, another name for a state. We have a couple options for the sales tax returns. We have kind of a do-it-yourself assisted returns, which is roughly $18 per return. And then we have a little bit more of a white glove service where it's a bit hands-off, which is roughly $50 per return. So again, I'm a firm believer in do what you do best and then outsource all the rest, right? Sales tax is our problem. Let us handle it, and we can help you as much or as little as you need. All right, so I'm about 10 minutes ahead of time. This will be good because this will give us plenty of time to answer some of the questions. I'm going to go ahead and just start going through some of these one by one. One of the first ones that popped up was, when I get registered, how often do I have to file a tax return? And that's one of the most common questions I get. So as you get registered for sales tax in a state, the state will determine your filing frequency, so whether you file monthly, quarterly, annually, semi-annually, and they're going to determine and tell you which form you have to file. So in New York, it's a ST1005, and then what's going to happen after that is you're then going to tell the Avalara software, here's the form I file, here's how often, you guys go do the rest. So one of the common questions, the states will determine your filing frequency, and you will then leverage us to file the sales tax returns and also remit the payments. Good question. Let's see here. So let me back up. Give me 1 minute. So is the sales $100,000 or $250,000? So every state is different. The majority of the states that we see are $100,000 or 200 individual transactions. So if you do over 200 transactions in a state, you want to double check those particular states and look and see if they have a threshold for transaction count, or if you're doing over $100,000. All right, second one, we will send out a copy of the recorded video as well as the slides. Does Avalara manage the registration process? Yep, so we can do the registrations for you. Typically, registrations are $199 per state. We partner with a company called businesslicenses.com, so we take the order and then they fulfill it on the back end. They're the industry leader in the space, and they typically have a turnaround time of, once you get registered and submit the application, within 3 days we can have a tax ID for you so you can legally collect or remit sales tax. Good question. All right, how does Economic Nexus apply to Canadian companies selling on the USA and on Amazon? Good, very fair question. So same exact concept as if you're selling and you're a non-US company. So whether you're Canadian, whether you're based in Brighton or somewhere in the EU, thresholds are still going to matter. You're still going to have to get an FEIN number, so you're a legal company in the US. Very, very good question, but very common. So it impacts all businesses regardless of where you're located. Are the Economic Nexus thresholds the same in all states? No, every state's different. Like, for example, New York said $350,000 worth of sales and 200 transactions. Tennessee, their threshold has no transaction count. It's just $500,000 worth of sales, and then you have to get registered. So every state is different. And again, we'll send out plenty of information as a follow-up to the webinar today so you can see what states and which ones. Can you use Avalara to keep track of your sales prior to reaching the Economic Nexus? Yep. So if you take all of your Amazon sales and you upload those into AvaTax after the fact, we can then alert you once you hit an 80% threshold in a given state, whether or not you need to get registered moving forward. So we can do that. All right, if a product is purchased through, I'm just going to keep running through these. If a product is purchased through Amazon and fulfilled through FBA, yet the client is exempt, will Amazon charge sales tax? If not, Amazon will supply the exemption certificate. That's a good question. I'm going to have to defer either to Amazon or a CPA or a tax attorney. I don't want to give the wrong answer, but I don't unfortunately know the answer to that one, and I don't want to say it the wrong way. Does Avalara assist in the registration process? We did cover that. Let's see here. What did Matt mean when he said in step 2, enter those states into Amazon? Yeah, so step 2. So number 1 is get registered in the states where you know you need to be collector remitting tax. Step 2 would be going into your Seller Central account, putting your tax ID in, and then checking a box so you can legally collect or remit sales tax. All right, you mentioned filing tax returns. However, does this also mean that companies with Nexus are required to file annual business license? Good question. So I'm not extremely versed in the income tax space. I think you're really only going to have to file income tax returns if you have an employee in that state. If you're just triggering an economic nexus threshold, then that's just going to make you liable for sales tax purposes. Avalara is just focused on sales tax. There are states where if you do have a physical location, that you have to get a business license in. We can assist with the business license as well. Let's see here. Does an Amazon seller need to register with each state? Bear with me here. With each state, even if sales are through FBA, Amazon. Yeah, so there are quite a few states that are, if you are only selling on a marketplace, and Amazon is the one fulfilling the orders, and the only reason you would have to get registered in that state is due to Amazon. There's a handful of states that you don't have to register in, and then there's quite a few that are going to say you do as well. All right, if I have a product in FBA warehouse but do not have economic nexus, are you still required to get registered? Good question. I have to be really careful how I answer that because that falls along the lines of tax advice, so I kind of have to leave that as a gray area. If you have inventory in a warehouse and it's not a marketplace facilitator state, most companies are getting registered because that's effectively a physical presence. Great question. What happens if Avalara prepares a sales tax return? We file them on time, we fill them out. You're going to leverage the Avalara software. You're going to tell us what form you file and how often, and then Avalara and our software will actually accommodate that ongoing. You can set it up where you can set it and forget it, and then we can file the returns. Good question. If I'm reselling SMX texting marketing service, so SMS textings are also subject to some additional types of taxes. You're going to want to probably lean on a CPA or a tax attorney about that to get you some direct information. All right, how much was the consultation with Avalara? Yep, so we do a nationwide Nexus study for $4,500. You'll fill out a bunch of questions based on your prior 12 months of business activities, and then we'll give you a detailed PDF report of what states you need to be registered in. Okay, we're good there. We've covered that one. What is the difference between Avalara Service and Trust File? So Trust File is going to be a returns filing solution only. It's not going to do any calculations. It's more so for folks that don't have an accounting system or they're looking to just have some form of a way to file returns. It can be automated. You can file returns in every state. It's a great product that we've been using. It's predominantly geared towards marketplace sellers or companies selling on Amazon, eBay, Etsy, Walmart, Jet that already have tax calculated. Karen, I have a question for you. So my question for Karen is A2X compatible with Oracle? And then the second part, can it be used to post all Amazon transactions into Oracle for Karen?
Okay, so we don't have a direct integration with Oracle. However, we have developed a manual integration, and what I mean by that is that we provide the ability for you to upload your chart of accounts and to map your transactions, and then once a settlement closes and it comes into A2X, we're able to provide an export file. Depending on how Oracle takes in the settlement data, like how you would enter in a kind of a journal entry or what have you, that you would then reconcile against your deposit, it depends on whether you would need to do something with that file afterwards, but yeah, we have an article about that. So noting your question here, I can make sure that you get that article.
Perfect. Thank you, Karen. Let's see here. Question: how does Avalara compare with Taxify and TaxJar? Great question. So those are a couple of our competitors, Taxify and TaxJar. TaxJar has been around. We've been in the business for roughly 15 years. They're a little bit newer to the game. They're where we were about 10 years ago. We've really built our service and our product on scalability, which is why we have direct integrations to over 750 accounting platforms today. So there are some differences. We have, and I have my alarm going off, making sure we're good on time. But again, direct integrations were built to scale with you. If you're on QuickBooks and you go to NetSuite and then at Oracle, or you're selling on other marketplaces and then you're going to upgrade accounting packages, you can never outgrow Avalara, and that's how we've built our automation and the ease of use. So hopefully that'll help. Do you have to pay sales tax to the ship to or ship from or ship to? Sales tax is typically going to be derived from the ship to address. Wherever the goods are changing ownership is where sales tax needs to be calculated, assuming you have an obligation to collect tax in that state, and then assuming you are you're selling something that's taxable in that particular state. Let's see here. So can you explain the upload sales tax into Avatax? Yep. So there's a 16-step process where you can pull the data directly out of Amazon if you want to upload it into Avatax. It's a little bit cumbersome. Soon we're going to have it where it's a click of a button, but that would be where you'd want to get it in if you wanted us to recalculate the sales tax, if you're looking to track economic nexus. Manual right now, but it should be very seamless over the course of the next 6 months. The states have changed a lot of their requirements for sales tax, which is always difficult, so we're always constantly updating and developing our software where we can accommodate whatever new changes. There's a couple states out there that are really, really challenging. Those are, if you want to jot them down, Colorado, Louisiana, and Alabama. Those are home rule states where it can be really tricky for sales tax purposes, and I'll leave it at that. Karen, one more question for you. Does A2X integrate with Shopify and QuickBooks Online?
Oh, yes. Yes, it does, actually. So A2X's new Shopify integration does connect with QuickBooks Online as well as Xero. Direct integration. And
how about Sage 50C? Maybe that's just Sage 50 with a question mark.
Again, we don't have a direct integration, but again, we have a manual integration. So noting your question here, I'll make sure that you get the article as well. So we have a manual integration that quite a few users are using now, and you know, it's working out. So yeah, it can work. It just depends on how the data needs to go into Sage, and I'm not really familiar with that software to know exactly how that works, but we can definitely talk with you about that and figure out the best way to do it.
Perfect. Next question, is Avalara integrating with QuickBooks? Can you calculate tax in QuickBooks? Yep, so we actually have a direct integration to QuickBooks, NetSuite, Sage. That's our core offering, which is Avatax. Avatax is a direct integration to your accounting software to calculate the sales tax, determine if what you're selling is taxable, and then the filing and the remittance. We calculate tax at the line item level, and we'll do rooftop level calculations, so city, state, county, and then any special taxes that are applicable. Should sales tax be calculated on the item sold plus shipping? Yep, so every state is different. Shipping and handling is taxable in some states it is not. That's a setting in Amazon where you're just going to turn it on to decipher whether it's taxable, and they will make that determination. All right, let me jump over here to the chat. I see a few questions over here. So where do I see your rates? Yeah, if you go to avalara.com, under we have a small business suite, and it will actually walk you through both products, Avatax and then also TrustFile. I've already answered that question. Bear with me. Okay, so Martina put in the chat for everybody the South Dakota versus Wayfair page, and I'm going to get one more piece up here that I'll put in the chat momentarily that's going to walk you through exactly the requirements for marketplace sellers. So a lot of folks are always trying to figure out if you need to get registered in these particular states based on only selling on a marketplace. So I'm going to put that in the chat to everyone. Give me 1 second here. All panelists and attendees. This is a link to our help center if you want to click on that. And then it will give you some very detailed information about Alabama. So if in Alabama you're only selling on Amazon and that's the only reason, then you may not have to get registered for sales tax purposes. So that would be a good one to bookmark and keep on file. And again, we'll send all these out for all the folks that are on the webinar today. If you're looking to have a conversation, or if you want to start automating sales tax, you can reach out to us after the webinar. We'll be sending a follow-up email with the recording, I believe, over the course of the next 5 to 6 days. So you'll be having that shortly, as well as the slide deck as well. All right, give me 1 minute here. Let me go through a couple other things, see if I've gotten all these questions. With the Shopify integration, it can handle payments in multiple sources, PayPal. Yeah, so again, Shopify, PayPal, some of those other platforms, you're just going to want to turn tax collection on. Can you sync with Walmart transactions to Avalara? Yep, we're currently developing an easy way to get all your Walmart sales into Avalara for filing purposes, or if you're just looking for an easier way to file the tax returns. All right, let's see here. I'm going back to the top, and Martina, if I've missed any, let me know, but I think I've gotten the majority of these. Every state is not the same for Economic Nexus. Here we go. Can you use Avalara to keep track of your sales prior to the Economic Nexus? Yep, so if you have all of your sales and you're getting those into AvaTax, we have a way to alert you when you log into your account if you've hit 80% of the threshold in a given state. All right, give me a minute here, just going through all these. Is Avalara system registration? We covered that. Oh yeah, sorry, we had a story about California. Oh, I can't forget this. We have 8 minutes left, so I'll make sure I go real quick. So I like to use this example when a seller asks me, well, I probably should have been collecting tax for a long time and didn't. So one of my sales reps was working with a company, and they decided to take the approach of, I'm just going to get registered. They're not going to know who I am. I just want to get registered moving forward. So California, and every state in particular, the first thing they're going to ask you on the registration is, when did you first start conducting business in that state? And under penalty of perjury, you have to tell the truth. So by saying you're a brand new business and on August 15th you started, you're under, not under oath, if you will, but you have to make sure you're telling them the right date when you first started. So what we had was we had a client, and they were getting registered in California. And as they just decided to pretend like nothing had happened in the past, and as they got registered, the state of California asked them if they were an FBA seller, which I think they asked that on every application, number one. So you want to make sure you tell the truth on that. Number two, once you do confirm that the date that you started, this particular client said, no, we're a brand new company, we're just starting out. And they asked them to confirm that in an email. And they confirmed that they're a brand new business. And the moment they confirmed it, California went back to them and said, interesting, according to our records, you have been conducting business or you've had inventory in this state for 10 years or 5 years. I can't remember the name of it or the time frame of it for what it was. So they then went back and really went to work on this company because they went after penalties, fines, interest, total not collected sales over the course of 5 years. California statute of limitations, I think they can go back up to 7 years. The majority of the states are 3 to 4 years, and Avalara can assist if you do get in a pickle, if you will. We have an entire team of tax advisory services. They're made up of former CPAs, tax attorneys, state auditors. The head of that division was a California state auditor for, I think, roughly 30 years. So if you are really in a pinch and your CPA or your bookkeeper is outside of their scope, we can do voluntary disclosure agreements where we'll go to the state anonymously, ask for penalty abatement. Let's say you owed them $300,000. You'd pay us $3,500 per state to do a voluntary disclosure agreement, and our goal would be to go, instead of you owing $300,000, you only owe $100,000. We want them to limit the look-back period, ask them about penalty abatement, penalties, fines, and interest. That is an offering we have as well. But again, for the majority of the companies just getting registered moving forward, the states really aren't concerned, but California is a little more aggressive as it relates to selling on Amazon. And one of the things we've seen over the course of the last year is CPAs, bookkeepers, QuickBooks Pro advisors, they always used to all want to handle sales tax, and they would for clients, because in the past, it was just 1 or 2 states. Well, now with Economic Nexus, companies are having to get registered in 5, 10, 15, 20 states, and they don't want to be liable for it. So they're now referring a lot of folks over to Avalara, and our phones have effectively been ringing off the hook. So that's my California story. Again, focus on revenue generating activities. Sales tax is our problem. Leverage us. We can help you as much or as little as you need. And I'll stop there. I think we have about 5 minutes left, Martina. I'll see if any final questions have popped up. One more real quick. 100,000 or 200 transactions are annual thresholds, so it's not monthly. So if you're annually doing $100,000 or more in a given state, you're then going to have to get registered to collect or remit sales tax. So those are annual numbers. And I think I've gotten the most of them, Martina, so I'll pause there. I think we're doing pretty good on time, and I think we've got almost every question.
I think so too. There was one that popped up that I think deserves a little bit of clarification. If you can address this, someone asked if you can turn sales tax collection off in Amazon if you have not hit those economic thresholds. And I think probably the clarification there would be something around, this probably has to do with marketplace facilitator states where Amazon is defaulting sales tax collection.
Yeah, and I'm not going to have a great answer for that. That's probably a question you would want to ask your account manager over at Amazon, or a direct, CPA or a tax attorney on that one. I don't want to give the wrong answer, but I'm not 100% sure on that one. But great question, and I wish I had a better answer for you.
Cool. I think we've hit everything else. I just, did another scan here, and it looks like a number of you did have the same questions. So if someone has a burning question that has not been answered that we somehow missed, there were a lot of them that came through, you can go ahead and type it in right now, and we will use the last couple minutes just to try to answer it. Okay.
One of the ones that came in, sales tax should be calculated on the item sold plus the shipping cost. So they're typically going to be broken out separately. So you have the cost of the item, and then whether or not shipping is taxable as well. Typically, sales tax is going to be derived from the whole transaction, but if shipping is a different line item, then it may have its own taxability, and that's going to be something you're going to set up right there inside of Seller Central.
Okay, and I am seeing that there was an unanswered question. Someone said that they had an unanswered question. I can't quite find it. It's a little hard to track the unanswered ones down. Can you retype it in the Q&A? There was a question on customer exemption certificate. How are they managed?
Oh, yeah, I think that might be. So I think one of the questions was, let's see here. Yeah, one of the questions, and this may not be related to, and I'll try and get these real quick. So Nexus is created if you're having inventory in a state. So if you have inventory, or if you have employees in a state, or you're located in that state, then Economic Nexus is not going to be relevant, right? Those are physical presence Nexus requirements where you're going to have to get registered to collect from its sales tax. And once you're registered in a state, the Economic Nexus portion, it really doesn't matter. It's not important because you're already registered in that particular state. Physical presence Nexus will always be a key component. Now, for Economic Nexus, you need to look in the states where you don't have inventory, you don't have employees, you're just selling a certain amount into it. All right, I know we're right at the bottom of the hour, but any other questions, please reach out. We look forward to helping you, and thank you everybody for taking time out of their day, and we'll send the recording out to everybody who is potentially in a different time zone or on the other side of the globe where it's nighttime.
Yep, and anyone who did not get their question answered, I know there were still a few of you where we are at our hour, so we will follow up with you directly. Thank you again so much for attending, and I've answered a number of you already, but we will have this recording and PDF go out early next week, so look out for that in your inboxes. Again, reach out to any of us if you have further questions, and we'll be touching base with you on any of those unanswered ones. Thanks again, everyone.